Hello, hi, and welcome to the market update from 20th January to 24th of January 2025. So let's start with the usual 10-year US 10-year tracking the US 10-year Treasury bond yields. The 10-year US 10-year Treasury bond yields have been trading in the same range of 4.6%, which it was trading in the last week. Of course, the number is on the higher side, that is above 4.5%. It's stabilized there. Other index which has come down after US government change took place, where the Trump administration has sworn in last week. The US dollar index closed at 107.08, down from highs of 109, which is a good sign, and we need to continuously monitor if this is just a temporary downfall, or it will reverse, or it will remain, and it will start going down. Another data point which was down was the Brent crude oil, which started trading at $78.43 a barrel, down by 2.85% from the highs of $80 a barrel in the previous few weeks in this month of January. Gold prices have been on an up move, and are now currently trading at $80,000 per 10 grams, up by 1.24%. Now we look at how the markets were overall. The U.S. markets, after Donald Trump took seats as the U.S. president, is up by for the week is up by 2%. Dow Jones to Nasdaq is 1.66%. The European market was either flattish or was up. If we look at the Asian market, was again in a mixed zone, where the Nifty was down by 0.9%, whereas the Nikkei, Hang Seng, and the Shanghai markets were in the positive zone, were overall positive. I look at how the activity on the FIIs and DIIs look. FIIs activity, FIIs sold close to 22,500 crores worth of equity. DIIs, on the other hand, bought 17,577 crore worth of equity. This, along with the selling, made the January selling of FIIs to 69,000 crore worth of equity, whereas DIIs had been buying has pumped in 66,944 crore worth of equities into the Indian market. So overall, we see that the stronger the FIIs have been selling, the stronger DI has been into the buying market. But with this, the January month became the second highest month of equity selling by the FIIs. Now we look at the weekly performance of the Indian market. The Sensex was down by 0.5%, whereas the 0.5%, whereas the Nifty Bank was down by 0.36%. Nifty Mid Cap was down by 2.4%. Nifty Small Cap was down by 4%. So we saw a sharp correction happening in these two indices after being stable for last about a week or two, and with the laggard in the correction, we are seeing that the mid cap and the small cap side of the market has corrected a lot. On the valuation front, we see that if Nifty 50 trailing P has reached 21.1, which is below 2 years average and 5 years average, a very good P to look in for buying Nifty. Nifty Mid Cap 150 trailing P is at 40.1, which is above 2 and 5 years average. Nifty's Small Cap 100 trailing P is at 31.2, which is above 2 years high and above 5 years average. If we look at the Buffet indicator, that is total market cap to GDP, it shows that the indicator shows that the market is modestly overvalued at 114.49%. Now we look at the Indian bond markets. The 10-year government bond for of India was trading at 6.829% per percentage of yield. Something interesting is happening in the yield curves. The shorter maturities are showing a normal convexity at 17.4, Whereas the medium term, that is 5 years to 2 years, is now that is mid-term to short-term maturities is inverted. But on the longer side of the yield curve, it still remains flat for the year. So thank you for watching us, watching this video. Do share, subscribe, and like to our channel to get more updates, weekly updates. The detailed discussion on would be shared by the by me on my on note with my customers. Thank you.